The mega trend that's been driving U.S. markets for over a decade is about to end. That's right, the era of U.S. stock dominance might be over sooner than you think. I've been analyzing reports from top asset managers and economic experts, and they're all pointing to a major shift in global investment patterns. But here's the kicker. This change could open up exciting new opportunities for savvy investors. Stick around as we dive into the 4 key trends reshaping the financial landscape and learn how you can position your portfolio for what's coming next. Let's dive into the 4 major trends that are reshaping our global economy. These aren't just minor shifts, they're seismic changes that have been brewing since the 2008 financial crisis and have really kicked into high gear since Russia's invasion of Ukraine. We're talking about de-globalization, the resurgence of big government, challenges to democracy, and a radical shift in central bank policies. Each of these trends is powerful on its own, but together, they're creating a perfect storm that's set to flip the investment world on its head. Understanding these forces is crucial for any investor looking to stay ahead of the curve. Let's break them down one by one. First up, de-globalization. Remember when Made in China was on everything? Well, those days are numbered. Companies and countries are pulling back from cheap overseas production and looking closer to home. It's all about reducing risks and shortening supply chains. This friendshoring and nearshoring is reshaping global trade patterns. Now, this shift isn't great news for everyone. Countries like Germany and the UK, who've relied heavily on cheap production in Asia, are scrambling to adapt. But here's where it gets interesting for us. Mexico is emerging as a big winner. While their stock market hasn't caught up yet, experts are bullish on its potential. And it's not just Mexico. Many emerging markets are well positioned to benefit from this trend. They've got solid economic foundations and attractive valuations. It's just a matter of time before investors catch on. So, keep an eye on these markets. They could be the next big thing as de-globalization picks up steam. Now, let's talk about big government making a comeback. We're seeing a trend where many countries are questioning the idea of letting markets regulate themselves. Instead, there's a growing call for stronger state intervention. This shift is happening in places like the US, Germany, and even traditionally market-friendly countries like the UK and Sweden. It's a global phenomenon, folks. Just look at the numbers. In many countries, government spending now accounts for over 50% of GDP. That's huge. This trend kicked off during the financial crisis when governments stepped in to stabilize the markets. But here's the thing. While it might seem like a quick fix, history shows that heavy state involvement often leads to slower economic growth and less innovation. For investors, this means we need to be savvy about which sectors might benefit from increased government spending, and which ones might get squeezed by new regulations. It's a whole new ball game out there. Let's face it, democracy is having a tough time lately. We're seeing a global trend of people gravitating towards political extremes, both left and right. This isn't just happening in far-off places. It's right here at home, too. Take the upcoming US election, for example. If Trump wins again, economists are predicting some major shakeups, especially in foreign policy. Now, you might be thinking, what does this have to do with my investments? Well, a lot, actually. Political instability can lead to unpredictable markets. It can affect trade relationships, regulations, and even the value of currencies. Remember how the markets reacted to Brexit or to the US-China trade war? That's just a taste of what could be coming. As investors, we need to stay alert and be ready to adapt our strategies to this changing political landscape. It's not all doom and gloom, though. Where there's change, there's also opportunity, if you know where to look. Now, let's talk about central banks. These guys have been the superheroes of the financial world for years, swooping in to save the day whenever the economy hiccups. But here's the thing. Their powers might be waning. After years of pumping money into the markets, central banks are starting to pull back. Why? Well, remember that inflation scare we had? That was a wake-up call. Going forward, experts think central banks will be much more cautious about flooding the market with cash. But here's where it gets tricky. Inflation isn't totally off the table yet. If the economy picks up steam, we could see prices start to creep up again. Or, if governments decide to go on a spending spree, that could also fuel inflation. It's like walking a tightrope. Too much stimulus and we risk inflation. Too little and the economy might stall. For us investors, this means we need to stay on our toes. The days of relying on central banks to keep the party going might be coming to an end. We need to be prepared for more volatility and possibly higher interest rates down the road. All right, here's the big one. The potential end of U.S. stock market dominance. For years, investing in U.S. stocks has been like having a golden ticket. The S&P 500 has outperformed most other markets, and it's been a no-brainer for investors worldwide. But folks, the tide might be turning. All these trends we've been discussing, they're converging to create a new investment landscape. De-globalization is shifting production away from traditional powerhouses. Political instability is making investors nervous, and central banks aren't providing the same safety net they used to. This doesn't mean U.S. stocks are suddenly going to tank, but it does mean that the astronomical outperformance we've seen might be coming to an end. We're likely entering an era where a more diverse, global approach to investing could be key. Countries and regions that benefit from these shifts, like emerging markets or countries with strong domestic production, might start to shine. It's a paradigm shift that could reshape investment strategies for years to come. So, what's an investor to do in this changing landscape? Diversification is key, now more than ever. Consider expanding your portfolio beyond just U.S. stocks. Look into emerging markets that could benefit from de-globalization. Don't ignore commodities and real estate, which can be good hedges against inflation. And keep some cash on hand for opportunities that might arise from market volatility. Remember, it's not about predicting the future, but being prepared for different scenarios. Speaking of being prepared, this shift in the global economy isn't the only surprise the market has in store. In fact, my last video exposed a shocking truth about one of the hottest stocks in the market right now, Nvidia. Despite record-breaking profits, their stock took an unexpected nosedive. If you're investing in tech or AI stocks, or just want to understand why stellar earnings don't always translate to stock success, you need to watch that video next. It's packed with crucial lessons from tech giants like Microsoft and Amazon that could save your portfolio. Click the link in the end card to watch it now. Trust me, you don't want to miss this one.